Hello, my name is Brenda Hayward. This video is called The Advantages and Disadvantages of Paying Off Your Mortgage Early. Homeowners, there are a few benefits to paying off your mortgage early. Even releasing yourself from the burden of the loan is definitely one of them. My video will include 1. Financial long-term burden removed. 2. Weigh mortgage against investment. 3. Utilization of investments. 4. Additional cash flow for the household. 5. Stop paying private mortgage insurance. And 6. Convert home equity into cash. 1. Long-term burden removed. Homeowners, when you first plan to purchase a home, you had never thought about the length of time you were really committing to. Now that you thought about paying off your mortgage for a length of time, now you are considering the idea. Most homeowners in the same position have considered the idea of paying off the mortgage early. However, they think about paying off the mortgage while they are burdened with other outstanding loan balances. Now that they are stressed, they believe paying off the mortgage will be liberating. Letting homeowners sleep silently, knowing a long-term obligation to any mortgage lender no longer exists. Even the other homeowners that had minimal financial worries enjoy the thought of the paid off mortgage as having peace of mind. 2. Weigh mortgage against investment. As a homeowner and making a decision on how you are going to spend your money, and saving or investing in your future requires planning. Since your mortgage payment is one of the biggest loans that you will ever take out and pay for over a period of time, thoughts of the interest paid flow through your mind and how that money could have been put elsewhere, like towards your investments. Paying off your mortgage early can allow for additional funds to be added to your 401k or IRA investments. Investments are really not helpful unless they deliver a rate of return that is better than your low mortgage rate. Otherwise, if you have extra funds, just put the extra funds towards paying off the mortgage. Homeowners, if you have already paid off your mortgage and you do not need to weigh your investments against your home loan because the home loan is paid off, if you decide to keep the mortgage when money is cheap and the pendulum swings to rock bottom interest rates, you would be foolish not to refinance. All homeowners should take advantage of the lower interest rate while keeping their original mortgage loan payoff schedule. Number 3, utilization for investments. Homeowners, once the mortgage is paid off, you can sit down and plan how to spend those funds. And one way is to invest in safe investments. Yes, your home loan could be a risky investment. There is always the possibility of housing prices dropping and the house being worthless. This really happens. However, the possibility is still there. Homeowners, if the money needs a place to go, then there's an opportunity for you to invest in higher risk markets. This is where you can take the time to research and decide if you want to take a chance in this direction. Find a financial advisor about long and short term investing once your mortgage is going to be paid off, or you get more advice. Get advice that pertains to your unique situation and projected goals on how much will you have available to spend monthly. This video is just to give you bits of information on why a 30-year mortgage is good to go as you plan your future. Number 4, additional cash flow for the household. Homeowners. Yes, homeowners need extra cash on hand for emergencies. Also, as children grow up, Parents want their children to participate in sports or any events that keep them busy. These extracurricular activities do cost money if families want their children to participate. Just knowing the biggest loan repayment is paid off, releasing you as a homeowner from stressing to get the mortgage paid off monthly. 5. Stop paying private mortgage insurance. For homeowners, a percentage of the mortgage loan payment is spent on private mortgage insurance. PMI is paid by homeowners until 20% of the equity of the home is reached. Right now, as a homeowner, check to see if you have reached that 20% equity to get the amount removed from your monthly payment. If so, you can utilize that money on other expenses that support the household. PMI offers no benefits to home buyers. PMI only offers benefits to the lender if you default. Many homeowners forget to check on the PMI payment deduction and end up the entire loan period. So please check to see if you met your 20% equity requirement and put the money back in your pocket. 6, convert your home equity into cash. Homeowners, now if you have paid off, you can utilize your home to get loans utilizing the home equity you have built up in your home over the years. The equity allows you to open a credit line. This credit line is good to pay for emergencies, redecorate, or just utilize the funds to pay for some of your children's college costs or weddings. The funds will be available to use when you need them. These funds may also allow you to invest in another property like a small vacation home or a down payment for a home for your children. Just a little about me. I'm a person who enjoys food. However, cherry cheesecake is one of my favorite foods. Just to let you know, I am not a real estate agent, accountant, lawyer, or loan officer. Please let me know if you like this video by clicking a thumbs up, subscribing, or leaving comments below. Homeowners, there are reasons why you don't need to pay off that mortgage in advance. Paying off your mortgage usually takes funds from other areas you support. The rest of this video includes 7, less extra spending money. 8, no tax deductions on interest payments. 9, change of credit score. 10, funds are available to support investments. Number 7, less extra spending money. Homeowners, if you have extra funds left over after your current budgeted bills are paid and your friends out night are done, once you decide to put that extra money towards paying off your mortgage loan, you can no longer support those events. If an emergency arises, you will need to ask for a home equity loan or sell your home to get the needed funds. What I'm saying is if you held off paying the mortgage and saved, you would immediately have money to access quickly. Homeowners, most people that pay off their mortgage do not mind the extra cash availability. 8, no tax deduction on interest payments. Homeowners, dependent on the amount of interest you file on taxes yearly, this deduction will no longer be available to you. Homeowners, if you're single or married, tax deductions was more. This deducted was not available to you. As a homeowner, you could claim an itemized deduction for interest on a mortgage up to $750,000 if married, and $375,000 is married filing separate. These limits are good to 2025. Some homeowners already know that under the current tax law, deductions for having a mortgage are less appealing. There are few tax breaks for homeowners. 9, change in credit score. Homeowners, some of you already know that once you close your revolving credit account, your credit score changes. If the mortgage loan is paid off, the loan stops reflecting payments every 30 days. The credit scoring system can no longer see the loan as part of a revolving loan that is paid timely because the loan can no longer be seen as it drops off and only reflects other revolving accounts with lower loan amounts. Considering that the home loan is the largest loan that is available to homeowners, the credit score changes. When credits determine your viability as a borrower, monthly payments are an excellent way to have them quickly give you what is asked of them. Number 10, funds are available to support investments. Homeowners, if you decide to pay off your mortgage early, where are you getting these funds from? The money could be used for your long-term investment, which might yield a higher return. Your 401 or IRA is a long-term to support your retirement. Homeowners, don't use these funds that are currently invested to support your future retirement years. If you truly have available funds, putting funds towards your student loan could be more beneficial because once you retire, you will have less money available to access. Please weigh the cost opportunity carefully. Paying off a mortgage requires a cash outlay to support your current principal at twice the amount or more. This sizable upgrade in payment can jeopardize the current support you are giving to your household. Please maintain funds for emergency use and financial needs. Please let me know if you like this video by clicking a thumbs up, subscribing, or leaving comments below. My name is Brenda Hayward, and thanks for your time.